In this video, we're going to deal with non-cumulative, fully participating preferred shares. Let's read the question. ABC Inc. has the following. Preferred shares 10%, which means that the dividend is 10% of the carrying value of the actual preferred shares. The number of shares outstanding is 2,000 and the total carrying value is 200,000. Common shares 16,000 common shares outstanding and the carrying value is $800,000. The company is paying a $140,000 cash dividend in the current fiscal year. Required. Assume the preferred shares are non-cumulative and fully participating. How would the cash dividend be distributed between the preferred shareholders and the common shareholders? So non-cumulative means that any missed dividends are lost forever. If the company does not pay dividends in any given year, the shareholders have no rights to the unpaid dividend, and that means the dividends in arrears are never paid. What about fully participating? Participating preferred shares pay both the preferred share set dividend, which in this case is 10% of the carrying value of the preferred shares, but it also pays an additional dividend. A fully participating preferred share means that the preferred shareholders obtain equal status to the common shareholders. The preferred shareholders will participate or share with the common shareholders the dividends which are greater than the 10%, without limitation, meaning that they get a pro rata share with the common shareholders. Let's do the example so you see how it works. Let's create a chart. We've got a column for the preferred shares and a column for the common shares, and then we have a total column. Now the first thing we're going to do is pay the preferred shareholders their current year's dividends. That's going to be 10% multiplied by the carrying value of the preferred shares, which is 200,000. That's 20,000 going under the preferred share column and the total column. Now, the common shareholders are going to receive an equivalent amount, 10% of their carrying value. 10% multiplied by the 800,000 carrying value of the common shareholders, that's going to be $80,000 in the common share column and in the total column. Now, we can pay the common shareholders this $80,000 because the dividend is $140,000 in total. Subtract the $20,000, we have $120,000 left. Now we've got the $80,000 for the common shareholders. What's going to happen with the remainder? So let's do a separate calculation before we complete the chart. We need to know how much exactly is remaining. So we've got the $140,000. We're going to subtract the $20,000 that is payable to the preferred shareholders, and we're going to subtract the $80,000 that is payable to the common shareholders. That means the remaining dividend is $40,000. That's the amount available for participation. Since both preferred shares and common shares have received 10% of the carrying value of their shares, the remainder will be shared equally on a pro rata basis. So first, we have to calculate how we're going to prorate this. So we need to use the carrying value of the shares available to participate. So we've got the preferred shares, which have a carrying value of $200,000, and we have the common shares, which have the carrying value of $800,000. Add those together, that's $1 million in total. Now, the remaining dividend available must be used to calculate the rate of participation. In order to calculate it, we're going to take the remaining dividend available and we're going to divide it by the total carrying value of the participating shares. In this case, the calculation will be $40,000, the remaining dividend available, divided by the $1 million, the total carrying value of the participating shares. This is going to be multiplied by 100% and it's equal to 4%. So now that we know the rate of participation, we can use it to calculate the participating dividend. For the preferred shares, we're going to take the 4% and multiply it by the $200,000, their carrying value, which is equal to $8,000. The preferred shareholders will participate to an additional $8,000 of dividends. The common shares will take 4% multiplied by the $800,000 and that's going to be equal to $32,000. Add $32,000 and $8,000, we've got $40,000, which is the additional dividends available. There is another way of calculating the participating dividend. In this method, we're going to take the carrying value of the preferred shares, 200,000, divide it by the total carrying value of all the participating shares, 1 million, and multiply it by the total dividend available for participation, 40,000. This is equal to $8,000. We're going to do the same for the common shares. 800,000, the carrying value of the common shares, divided by 1 million, the carrying value of all the participating shares, multiplied by the 40,000, which is the dividend available for participation, and that is equal to $32,000, for a total of $40,000. Either method can be used to calculate the participating dividend. Let's move that participating dividend into our chart. The preferred shareholders obtain an additional $8,000 in dividends, and the common shareholders obtain an additional $32,000 of dividends, for a total of $40,000 in dividends. If we now sum up each of the columns, the preferred shareholders will receive a total dividend equal to $28,000. Common shareholders will receive $112,000, and the total dividend paid out is equal, of course, to $140,000. That's the method we use to calculate the dividends that will be distributed to the preferred shareholders and the common shareholders when the preferred share dividends are non-cumulative and fully participating. Thanks so much for watching.